What is going on, everybody, and welcome back to another video. First and foremost, I want to wish you guys a happy Father's Day, as Father's Day was yesterday for all of you amazing dads out there. Now, in today's video, what I'm going to be going over essentially is how I like to trade at all-time highs. This is a question I get asked very frequently, and instead of just posting a regular breakdown, I wanted to show you guys some of my results and how I've been trading these last few days, along with how I trade these current market conditions when there is no previous price action data to mark old key levels off of to potentially give us new price action setups at those old key levels. So I thought this would be a great video for you guys to watch and benefit from today. Other than that, guys, I have a quick update for you guys. I am actually going to be opening a second YouTube channel that is going to be solely dedicated 100% to recording and posting vlogs and car content. I'm going to keep my main channel, which is this channel, Lambo Raul, to be just solely trading focused and based off of education, just provide really as much value to you guys as possible. So I'm only going to be posting trading content on here from now on, which I know you guys will enjoy. And for those of you guys that want to watch a little bit more of me and see this face a little bit more frequently, then you guys can go over to my second YouTube channel and subscribe to my vlog channel, which will be right here somewhere along the screen here, or I will also post a link in the description as well. Without further more, let's get right into the video. Alright guys, so as you can see, I'm here on one of my trading platforms. Now, over this last week, since there was a lot of economic data, I didn't necessarily trade futures. I didn't really trade futures too much. Started to trade the derivatives and CFDs because the futures brokerages actually kill your margin when it comes to days of high impact and days of high economic data. So if you guys want to, because I did see a lot of comments what futures brokers I'm actually trading with, I will put a link down to the description of both brokers that I'm actually going to be trading with. One's a futures brokerage and one is a CFD brokerage for you guys. But the CFD brokerage that I'm trading on today, as you guys can see, top left hand side of the screen, there is a live account. And you guys can also see all the trade history here. If I scroll up a little bit, you guys will see a withdrawal there for $20,000 as well. So a $20,000 withdrawal and an $84,000 profit over the last few days of trading profit. Also want to show you guys this email here as well, just to be as transparent with you as possible. Now, I did actually withdraw more than $20,000. So I had deposited $1,000 into a separate trading account, and I ended up making $150 off of that $1,000 account. And really, I was just testing out different methods of execution on that trading account, risking only like 2-3% per trade, and I ended up making roughly around 15% on that account, which is why you guys see a withdrawal for a little bit over $20,000. But overall, based off of last week's profits, I withdrew 20K. As you guys can see, a lot of people don't necessarily show like the actual withdrawal to this extent, where you guys can see like this is actually real money. I have a real $21,500, $21,050 that I actually pulled out of the markets here into a deposit wallet. As you can see, June 12th, email also June 12th as well. And that's the money that I actually sent to my deposit wallet, and I sent it over to a different investment wallet. Now, when it comes to the markets and how I've been trading these current market conditions, one of the main questions I get asked the most is, Raul, how do you trade at all-time high? So I want to break down essentially some of the ways you could potentially make money, because if you go to the daily time frame or the 4-hour time frame, there is no previous price action data where we go like, okay, well, there was support here, there was resistance here. Which one thing I want you guys to keep in mind. So today I'm not necessarily going to get too much into the order flow topics, as I just want to cover like the technical analysis portion of this, because I know the majority of people, at least the DMs that I've been getting is like, Raul, I can't really afford order flow tools. Which what I say to that is, guys, look, it's an investment. It'll cost you maybe $1,500 a month, probably even like $1,500 a year. It just really depends on what order flow tools you actually go out and buy. Then you're having to subscribe to all the data feeds, right? So realistically, it's not going to cost you a lot of money on a monthly basis. But if you guys can't afford, let's call it even $1,500, you know, let's be more reasonable. Let's call it $1,000 a month into your trading business, which the order flow tools and the order flow data that you're going to receive from these tools is a relatively small investment for the way you're going to significantly increase your edge in the markets. If you guys can't afford that, then you're probably not supposed to be in these markets trading right now. You should probably go out and make some other form of income so that you can continue to invest into the markets. Because the one thing that I see a lot of people typically do is they think they're going to get into the markets with, you know, maybe only a few $100s to their name and make tens of thousands of dollars, and that's not necessarily the case. And I want to be here open and honest and transparent with you guys. You need money to make money in these markets. and I'm not necessarily talking about like trading accounts and stuff, and like, you know, you can always go the prop firm route. But when I'm talking about like order flow, if you want to get into order flow, then it's only going to increase your edge. And sure, it'll cost you maybe an extra few $100 a month for these tools and programs, but it's a well worth investment at the end of the day, right? So with that being said, how would I trade these current market conditions? Now I do have the sessions indicator on. So one thing you guys have to understand, it was actually CPI on Wednesday, which on Wednesday, you know, it was a little bit easier to trade this action because it's choppier actions, consolidating action, and we can actually mark off key levels based off of that. But I want to talk about how we could have potentially traded this pump on Wednesday and how I traded this pump on Wednesday. So first and foremost, we had CPI. We had CPI come out lower than expected, which is good for the stock market. We've overall seen price action run bullish. Every time you typically see CPI come out lower than expected, you can expect there's going to be a higher probability you're going to see some form of a bull run. If it comes out higher than expected, there's going to be a higher probability that you're going to see some form of a bear run. So when it came to the market open, because the market opened over here, right, price action initially dumped, formed this area of support, and then we had a ton of aggressive buying come in on the book map here, where there was also rest and liquidity down here at the 54.18s, and we saw price action go up and make a high. In these types of situations, all I simply do is wait for some form of a pullback. I know a lot of traders that'll be like, hey, you know what, price action's found support here. We have the 3-minute time frame resistance range here. I'm going to take a break of the highs at this 3-minute time frame resistance range, looking for maybe a 2-3 R multiple, even a 1-to-1 R multiple in that trade, and that's perfectly fine if you want to trade these breakout type of setups. But for me personally, I like to wait and establish that price action has actually formed a major area of support and a major area of resistance before looking to actually take a position. So when price action started to pull back here and then continue, there was no reason for me to mark that level off, unless again, like I'm going to take like one of those really quick scalps where I'm looking for a break of this high and a continuation up. But the one thing I want you guys to keep in mind about that is that these setups right here in these types of areas where you don't really get major pullbacks aren't really the best positions. Now this would have been a pretty solid trade because you can identify all of the volume. For those of you guys that are using order flow, you can see all the aggressive buying that came in the markets as well. And not just that, you have the market open volume. Then you have some consolidation. Yeah, you had 10 a.m. volume come in, which 9:30, 10 a.m., 10:30, and 11, you'll see kind of like waves of volume come into the markets. But 9:30 is of course where you're going to see like the highest probability for a good breakout setup. So when it came to price action, when it finally started to actually pull back, this is when you want to mark off your key level. Now, one thing I want you guys to understand in this situation here as well, not only did we have CPI in the morning, but we had the Federal Reserve interest rate decision, which had decided to actually keep rates the same. They did not raise nor lower rates. And then we had the Federal Reserve press conference. So keep that in mind. That's why you're going to see this extra added volatility during the afternoon session. So right as price action has finally pulled back and given us some room as to an idea of where our major key levels are in this current market, this is when you want to mark off your areas of support and resistance. So price action gave us an area of support here at the 54.18s during the market open, and price action gave us an area of resistance here at the 54.48s. This is where you want to have these two levels marked off. With CPI coming out lower than expected and price action overall being in a bull run, this is where you'd want to make the decision like, okay, well, if I'm going to be looking for a continuation on buys, what can I look out for? Hey, you know what? If price action comes back down into this area of support and we can establish that buyers are holding this area, maybe you could also use some other confluences such as rest and liquidity on the book map. And if those orders get filled and you see buyers hold this area, this could be a great setup for looking for price action to pop back up into this major resistance range, which this is a natural trade that I took. Or if you're going to be looking for a continuation on the buys and price doesn't come all the way back down in support, what you could look for is a break and retest of the 54.46s. Now I say a break and retest because in situations like this, like, yeah, you can take a breakout setup, but the probability for price action to go out, come up even higher, and then continue to go higher isn't necessarily like the greatest probability. So I would like to see price action break above these highs, pull back down, retest, and buyers hold this area more importantly. Because a lot of the times what you may see is actually price action fly, break the area of resistance, and then immediately come back down and go down and make new lows. So I want to avoid getting caught in that, and you could do that by looking for a break and retest. Unless you're like, you know what, Raul, I want to take a quick break at the highs for a quick scalp of a 1-to-1, 1-to-1.5 ratio. But okay. So in the situation where we actually did have the interest rate decision, the interest rates remained the same, which is why we saw this big move to the downside. And then what I established on the heat map and the footprint charts was that there was absorption down here at the 54.17s under support, and we did see buyers start stepping back in, and we had that initial rejection. With that initial rejection in this type of situation here, if your R multiple is not the best, then you don't want to take a position, because remember, we're looking to take buys down here at this support range that the market actually held during the open, where buyers stepped in and clearly pushed price higher in a significant range. I'm not saying like, you know what, this is an area of support, because look at the pullback and then look at the move you saw from buyers at this area. It's not really like the greatest area of support to actually have, although you can mark it off and see what happens in the future, because you do see that it did reject that area in the future again. Now, what I want to continue to say is, again, you want to look at the reactions that price action did earlier in the morning or in the afternoon or in the previous trading day, and mark your levels based off of that on the lower time frames. Or we're mainly going to be trading lower time frames and not really get married into any positions. So now that that's said, what I'm going to be looking for is a retest of this area. If you didn't originally take buys down here at the first rejection of this support range, looking to target this area, you can always wait for a retest. Don't FOMO into positions. When you FOMO into positions, that is when you're going to typically lose money more than make money. So you always want to wait for that retest. And again, like, my goal as a trader, I know all of you guys have different goals, but for me, I want to get into this area of support and get into the trade as close to that area of support as close as possible. Why? Because it's going to give me the best R multiple opportunities. Now, to give you guys the example, we'll kind of stay here on the, let's call it the 3-minute time frame. We'll bounce up to the 3-minute and the 1-minute time frame, but essentially what you want to look out for is price action to come back down and retest and reject this area, to look for price action to go long. Now, since price action has already confirmed that this is a solid area of support twice, if price action breaks below this area of support and we see new aggressive selling and we see new sellers stepping in below this area of support, at that point in time, I would switch my bias from going from longs to shorts. Then you ask, so like, hey, Raul, like in a situation like this where, you know, the last area of support is all the way down here, you're going to target that area? No. What I'm going to be doing is looking just to simply make money. 2, 2.5, 3 hour multiples is what I'm going to be targeting in a situation like this. So if price action does come down and start to break the support and I decide to go short with my stop loss up here just slightly above the resistance range, I'm only going to look to target a 2, 3, maybe a 4 hour multiple and a very, very, very aggressively trail my stop loss, because I don't want to get caught in a situation like this where we have the break, big pullback, a little bit of a push, and then a reversal, right? So I don't want to get caught in those situations. So again, waiting for that retest, looking for price action to come back down. Once you've established that price action rejected this area of support, came back up, formed an area of resistance, you want to take note of all of this. You go down to the 3-minute time frame, 5-minute time frame, and you can see that price action is respecting and rejecting this area of resistance up here. It doesn't matter if you have it marked off like this, if you have it marked off like this. You just have to have the understanding that, hey, you know what? Price action formed resistance here. We're having trouble. Buyers are having trouble to break above this area to come up into my TP. So in the situation where price action did come down and rejecting this area of support again, you could take buys, yes, but what I'm going to say here is, if you're using order flow, just establish that buyers are holding this area. What are things that I would want to see when it comes to order flow and footprint charts? I would want to establish for an aggressive entry like this that we have buyers stepping in. We have a ton of aggressive selling down here at support, but no follow through with those sellers. So these are all different criteria that I want to see met before taking buys on a candlestick like this. If you're going to be taking buys on a candlestick like that and you're not using order flow, it can be very, very, very risky for you. And I would heavily advise against it, because that type of rejection isn't solid enough for you to want to take that long position there if you're not using order flow. And I'll repeat that, if you're not using order flow. If you are using order flow and you just kind of covered and identified that criteria that we spoke about previously, then go for it. That it's solid to take the buys, but you can't see that when you're using just a price action chart. Now, what would be a better confirmation for you in a situation like that is you wait for the high of the previous candlestick to be broken, and then that's when you can actually execute. And again, I'm lower time frame trading at this point in time. I don't want to be married to any trades, because what you're going to see typically when price action is in these situations is moves come and go very fast. So imagine all the people that got married to buys over here looking for price action to shoot up into the next high or the next round psychological level, even like the 5440s or the 5450s, right? So if you were to be trading order flow, what I would advise is, hey, you know what, in a situation like that, when that criteria is met, you could definitely take the entries down there, go to the hour time or the minute time frame and see what that price action looks like, see the rejections like you're seeing. This is a solid rejection on this 1 minute time frame. So I want to give you guys the comparison of, you know, trading aggressively with order flow versus kind of waiting for that entry confirmation. So let's just say I want to put my stops down here at the 54.15s, which is an actual trade that I ended up taking at the 54.15s was a stop loss. It's a pretty wide and generous stop loss considering it is CPI and FOMC date, right? what you could do in a situation like this, because you have such a great entry in the markets when you establish that rejection, is you could just target these minor areas of resistance. And with these minor areas of resistance that you've established on the 1, 3, and the 5-minute time frame, what you're going to see is, because your entries are so good, you're still getting positive R multiples. What I want you guys to eliminate is the mindset of, I need to catch big moves in the markets to make big money. That is not the case, especially if you're trading CFDs or futures. All you have to do is increase your position size. It doesn't matter if you are risking, let's call it 100 points to make 300 points, or you're risking 300 points to make 900 points, right? If your R multiple is still a 3R multiple, you should still be following the same risk management parameters and how much you're risking. If you're gonna risk 10 grand on a 3R multiple trade, you're looking to risk $10,000 to make $30,000. Now, let's call it that this trade is a 45 point stop and a 138 point take profit. It doesn't matter if your trade is a 100 point stop and a 300 point take profit. While although yes, the move is a lot bigger and it's going to take more time for that move to play out, and you theoretically cut more points, you're still making the same amount of money. So remove that from your mindset that you need to catch these huge moves to make big money in the markets, because on this day alone, just catching a move from here to here, I made $45,000. And it's not a big move. It was a move based off of the 1 minute time frame. But this volatility is all you need. All you need is R multiple, and you just simply adjust your position size to that smaller stop loss, in which you're gonna see you're gonna be using bigger position sizes anyways. Now, like I was saying previously, if you're taking these types of aggressive entries, you may get stopped out a little bit more frequently, but the R multiple definitely makes up for it. Now, if you're taking more conservative entries, your win rate, your R multiple might not be the best, but your win rate may be a little bit higher, just simply because you're waiting for a little bit more confirmation. But in this same exact trade setup that we're discussing right now, instead of getting a 3R multiple, you're getting a 1.5R multiple. That's a huge difference. This is why I got into trading aggressively and why I got into order flow, because you're talking about a 1.5R multiple. When you look at it from a smaller perspective and you're not scaling, right? You're only looking at it, let's call it risking $1,000. You're talking about the difference between $1,500. Might not be the biggest difference in the world, but when you start risking tens of thousands of dollars on these trades, and you have swings and P&Ls with tens of thousands of dollars, you're talking about $15,000. That's a lot of money, right? So when it came down to this position, taking the buys right then and there would have been ideally solid. And one thing I want you guys to keep in mind, I don't want you guys to be worried about, hey, you know what, we have this support area right here, price action rejecting, I'm going to take the buys here. Don't think about it that way. Well, although yes, this is a minor level, your two major key levels within this intraday price action are going to be down here and down here. Why? Because here we've seen a ton of aggressive buying come in, where we saw the market just completely rally from. And then over here, we saw a ton of aggressive selling come in, along with take profits and maybe exhausted buyers. And we saw price action just completely dump back down into the market open support range. So just keep all of these different things in mind. And this is kind of like the intraday support range where we split price. This is how I like to set up my charts. Is I like to have my two major levels where I would like to look to take trades from, and then my kind of intraday level where this is where I'm going to be looking to maybe move stops, take profits, etc., etc. So in a situation where you enter here, yes, you could target all the way up here for a 5.7R multiple. But one thing I want you guys to keep in mind is, forget about the R multiple in terms of I'm holding for that home run trade, because a 5R multiple really is like a home run trade. You're getting almost a 6R multiple. Once you're in a 2+R multiple, just think about how can I protect my position and not give back all the profits, because something that people typically underlook is, hey, you know what? Let's say you're up a 3R multiple right now, that price action just went straight into profit, and you have your stops at break even. You're no longer risking 1R multiple to try and gain 5R multiple. You are now risking to try and catch the rest of this move. I want to put this into perspective, right? So your unrealized P&Ls from this point to this point, right? I want to put this into perspective here. So your break even is over here, and your take profit is over here. You're now risking literally 3R multiple to try and gain, let's call it an extra 3R multiple. So really that's a 1-to-1 risk to reward in that type of situation. Now to break that down even further, when you're in profit, let's call it a 3R multiple at this point in time, right? And this is why trade management is so important, and trading isn't just about entries, stop losses, take profits. It's about managing your trade as well. Let's say you're up a 3R multiple here, right? And you decide to move your stop loss to break even. You're like, you know what? I want price action to come up into this area here. And if price doesn't, then at least it's a risk-free trade, and whatever, it's a risk-free trade. While theoretically, yes, it's a risk-free trade, it's also not, just simply because you're in profit. you're just and you're just in an unrealized P&L situation. Now, the thing you have to ask yourself is, for an extra 2.9 hour multiple, do you really want to give back a whole, let's call it 3R multiple? So that's theoretically less than a 1-to-1 risk reward ratio, because you're going to be risking 3R multiple to try and gain 2.9R multiple in this situation here. Because remember, keep in mind, you're floating right now in profit a 3.1R multiple. For price action to come all the way up into here, you're talking about only a 5.8. So realistically, if you're allowing price action to come all the way back down to break you out at even, you're not risking, your trade isn't break even, you're risking 3R multiple of unrealized gain. What you're doing is you're risking 3R multiple of unrealized gain for a potential extra 2.8R multiple. That is not the smartest trading decisions to actually do. That's a decision based off of emotion. So in a situation like this, the way to protect yourself in these types of situations is like, okay, well, you know what, I am floating 3R multiple, but I'm gonna move my stop loss to at least a 2R multiple, and I'm going to trail my stop loss up by 1R every single time. So that way I'm only risking 1R to try and gain an extra 3R. That is a lot smarter of a game plan. Now for me, it didn't really work out too well when I tried to follow that in this specific trade. It was working out great because price action originally pumped all the way up into here, and I was floating about $65,000 in profit with roughly like a $20,000 or a $15,000 risk on this specific position alone. So when price action pumped up, this was floating up around 60K, price action pulled back down. That's okay. I had my stops at a 2R multiple at that point in time, I believe, or 2.5R multiple. I trailed it up a little bit higher. What it decided to actually do is trail my stop loss based off of the lows of the wicks, just simply because we had Jerome Powell actively speaking. And my mindset behind this was, all right, well, if he starts coming out with some hawkish comments, I don't want price to just dump and completely eliminate my position and give back all these profits for nothing, because we're most likely going to see some form of slippage if we see a ton of just random aggressive selling come into the markets. Again, I took the entries down. I took 2 entries along these areas here. One entry as price action rejected this area, another entry over here as price action started to go up, and I established that the buyers were holding the imbalance of this previous candlestick. And again, those are all order flow confirmations, which if you guys, by the way, want to see some order flow content, just go back into my previous YouTube videos, or you can join the free Telegram. There'll be a link down in the description. And lastly, to wrap this video up, I ended up closing the trade when price action just kind of gave me a quick dump. So, you know, this happened so fast, I just closed all of my positions really quick. Ended up making 45K on this trade alone, which is where you guys saw the $80,000 profit. And then in the next 2 trading days, I ended up making just a total of about $20,000 a day, which gave me that $84,000 profit. And that's going to break down this specific trade and how you guys should trade these current market conditions. I know I talked about a lot, but I hope you guys really enjoyed this video. Now, one thing that I did want to let you guys know before I actually end off the video, if you guys want to work with me personally on a one-on-one basis, and make sure you guys click that first link in the description if you're interested in leveling up your trading and really taking your trading career to the next level and scaling your trading. I'm here to help you guys reach your goals. So if you want to work with me on a one-on-one basis, just simply click that first link in the description and go through that simple process, and I will see you guys there. But other than that, for those of you guys that are watching this video still, I hope you guys enjoyed this video. And for those of you guys that are excited for the new trading content to come, just simply subscribe, make sure you like this video, turn on the notification bell so you guys get notified every time I record a new video. Other than that, take care everybody, have a great rest of your week, and I'll see you guys in the next video.